What's going on, my friends? It's your boy Chris over at VerrilloTrading. I got a special video for you guys today. In this video, I'm going to talk to you guys about my perspective on the buy side versus the sell side of the retail trading industry. I'm not talking so much about the professional side, more about the retail side, because that's the side that I have experience with. In the middle, I believe there is a gray area where some entities operate in, and they operate there. Most people don't know that. So I'm going to frame it for you guys in a specific way where potentially you can learn to see things from a different light. And I want to give you guys this because I've been making content in the trading space on this channel for 3 years, and I've been trading the markets for 5 years. So I have a bit of experience I want to share with you guys in this video. And when you watch the video, I would like you guys to write your comments and your opinions about what you think about this. You may agree or disagree. So let's get started. We're going to go over to the whiteboard over there. And if you enjoyed this content, check out some of the links down below to support this content. Thank you very much. All right, traders, welcome to my whiteboard here. I'm going to outline to you the difference between the buy side and the sell side and what I call the in-between or the gray area between the two in today's trading industry. Okay, just remember, everything I'm talking about here is my opinion. I might not be covering everything in the finest, most precise details, and I just want to give you my perspective on it. Okay, so on the left side, we have the buy side. Now, in technical terms, the buy side relates to anybody who buys stocks or engages in the markets, actively takes risk in the markets. So you have your big money corporations, your BlackRock, asset management, your mutual fund managers, your proprietary trading firms, anybody who's really actively involved in the business of risk management and managing big money and trading big money in the markets, okay? Also on the buy side, we also have what are called retail investors or retail traders. And this is your everyday person who learns about trading through an online advertisement or through a TV advertisement. Now, the reason why they're all the way down here, the retail investors compared to the big money, is because there's a really big gap between them in the trading industry. And the gap is due to, well, I guess it's due to a number of things. I guess one of the reasons why there's a big gap here is because the barrier of entry to the buy side is quite low. I mean, anybody can enter the market and, start throwing money at the market and start buying some penny stocks or do anything that they wanted to do, basically. And when it comes to the big money, I mean, the level of experience and resources that these people have compared to retail investors is, you can't compare them. And that's why there's a huge gap between the two. So I just wanted to outline this gap that I believe exists here between the retail trading industry and the actual big money institutions that kind of are responsible for moving the markets on a daily basis. Another reason why I think there's a big gap here is because we don't often really hear from these big money institutions. Let's go on and look at the sell side of the industry now. Okay, the sell side of the industry, just in simple terms, it's any business or any entity that exists in the trading investment world that their job relates to facilitating the operation of financial markets. Now, of course, just like the buy side, on the sell side, there's the professional side of the industry. This is where you have your big institutions that take care of, mergers and acquisitions and issuing company shares to the market, to investors, facilitating the business of big money on the buy side. So there's certain institutions on the sell side that they really have nothing to do with retail traders. They have nothing to do with retail trading software. They take care of things regarding the big money institutions and facilitating the business that they do. And oftentimes we have big sell side institutions like investment banks, Goldman Sachs and all that, where they have divisions on both the buy side and the sell side. Like asset management is on the buy side, whereas investment banking is considered to be sell side, and advisory services are considered to be sell side as well. Also on the sell side, really the majority of what things that we need to be concerned about is this right here. So this is the stuff that relates more to retail trading and in retail investing right here, which we have our exchanges, which of course everybody trades on the exchange, no matter if it's big money or small money. Now, the people that facilitate the trading on the exchanges are the brokers and the clearing firms. And these are essential institutions that need to exist in order for trading to occur. So in order for, no matter if it's big money, small money, to trade on the exchange, they need brokers and they need clearing corporations. By the way, this video is sponsored by Iron Beam Futures, who is a futures clearing firm. If you guys were looking for a futures broker, by the way, trading is considered a risk activity, so always be cautious of that. But if you're looking for a broker, check out Iron Beam using the link down below to learn more about them and the service that they provide. They are a clearing corporation in the same building as the Chicago Board of Trade. Now, before we go on, I just want to show you here the middle, which is what I'm going to get to as this presentation continues here. which is sort of a gray area between the buy side and the sell side. And I believe this is how the trading industry sort of operates today, at least the retail trading industry. That's what I'm talking about, okay? And here it is right here. So I'm going to show it on the screen. Traders on the buy side looking to increase their knowledge about buy side specific activities, aka trading, knowledge about trading, should always be skeptical, in my opinion, of taking advice from a sell side entity. Now, this is a pretty bold statement to make, and that's why I want to give you guys a couple of different perspectives on this, okay? I'm not saying that you have to completely discredit any information you get from the sell side about trading, but all I'm saying is that I want you guys to be a little bit skeptical of everything you hear from people that exist on the sell side institutions giving advice about trading. This could be your investment advisors. It could be a broker. It could be like a broker that has an offshoot company where they give sort of trade ideas and trade related advice, okay? The reason why I'm saying don't discredit them completely is because there are cases where you have buy side institutions like ex-prop traders go and become sell-side entities or open up another sell-side entity down the line. For example, traders that have experience in prop firms on the buy side, they go and become brokers later down the road and open up a division of their company that's a brokerage. And you shouldn't really discredit what they have to say, especially if they have real experience in prop. In fact, I think you should listen to what they have to say in that case because they have real experience in the industry on the buy side and on the sell side. And part of the reason why they joined the sell side and became brokers is because of their extensive knowledge about how trading works. So they made a decision that they want to also help and facilitate the lives of other entities and new entities that are coming to exist on the buy side. The people who have the most knowledge about actually trading are typically the people who actually trade, who actually engage in the business of trading. That is their business model. It's to manage risk and to trade in the markets and obviously manage everything that's associated with actually trading. Whereas the sell side entities, while they may have a good knowledge of trading, they're not actually trading. They're not in the business. Their primary business goal, their primary source of profit is not from trading. Therefore, you should not take advice from an entity where their primary source of profit is not trading. I'm generalizing it a lot. That's why I'm using certain words like just be skeptical. Don't discredit the information, but just be a little bit skeptical. So that's what I think about the sell side giving advice to the buy side. But what about the other way around? What if we see the buy side traders going to the sell side and telling them what they want? If a buy side entity gives advice or recommendations to a sell side entity that they work with, it normally falls into the category of criticism or an idea for how to improve their services. This is because the main customers of sell side firms are buy side. The sell side doesn't exist without the buy side. Okay, so now we're going to go on and look at the real meat and potatoes of this video here, which is what I believe is the gray area between the buy side and the sell side. And this is what it looks like here. Typically here we see entities that work for the sell side, but they're not sell side institutions themselves. So the primary one would be your marketing companies. So any institution that helps the sell side get more business on the buy side. And in today's day and age, we have internet marketing and we have content creators. Content creators, like me, we fall into this category of being sort of like a marketing company. And what often happens is this right here. Content creators in the trading space normally are buy side entities or retail investors. There's a lot of this. I'm one of them. So you have retail traders. Also in the realm of content creator, I want to share my journey about trading. I want to show you guys a couple cool tips and tricks I learned about trading and improving my trading. So I became a content creator. Now what happens is you gain influence as a content creator for other entities on the buy side. Of course, forget about big money because they're in another world of their own. We're talking mostly about retail investors here. And what happens here is we have sell side that they come through and they realize that some of these content creators have a degree of influence over the retail investor community. So the sell side institutions, they see that, and typically what you'll see is brokers and clearing firms or other institutions, they will reach out to the content creators and say, hey, we really like what you do, and could you please promote our brand to your followers on the buy side? And that's how these brokers and clearing firms aim to get more exposure and more business on the buy side of the retail trading industry. And I'm the perfect example of that because this video is sponsored by Iron Beam, who is a clearing firm. The next thing I wanted to cover is in today's trading industry, I think that there are sell-side entities that are disguised as buy-side entities, meaning that you have certain entities, and I put them sort of in the middle here, like for example, trading education company or prop firm, but not a real prop firm like some of those combine companies. Now, I'm in full support of online business, online education, and all that, but I just want to explain to you the dynamic that goes on here that I typically have seen. So we have these trading education companies or educators. Now, what a trading education company, technically it falls into the category of being sell side, right? Because they're selling things to retail traders, right? They're trading education. So they're not really in the gray area. They're on the sell side because they're selling and they're trying to facilitate the activities of retail traders. But the reason why I put them in the gray area is because in some circumstances, and I'm sure you guys have seen this, you'll see some of these trading education companies that they're sort of disguised or they're packaged in a way that they are made by buy-side participants, which of course you'll never really truly know that that's the truth unless unless they actually show you real proof, like broker statements or something like that. What you'll often see is that these people that claim to be trading educators or professionals, they disguise themselves as regular traders that made it, for example, in order to gain more influence and more business on the buy side. So these trading educators are pretty much sell side entities, but they're masking themselves as buy side in order to gain more influence on the buy side, okay? Now let's go ahead and talk about market makers. Market makers are super interesting. Of course, the business that a market maker does, it was different back on the floor days to the way it's done today in electronic markets. I think that the way a market maker trades, the market maker strategies, the way that they're employed today, probably they're being done by these people most of the time. And it takes a lot of resources and understanding in order to help to properly operate a business of market making, profitably. But I think that there's a lot that we can learn from the concept of what a market maker is. So a market maker, by definition, could fall into the category of a sell-side institution because the way a market maker trades is they're trading normally to facilitate the operation of the markets. So as a market maker, if I show up into a market, I'll say, okay, I'm willing to buy US dollar tether at this exchange rate, and I'm willing to sell US dollar tether at this exchange rate. And what they're doing is they're providing opportunities for other investors to engage in the markets. And of course, there is a risk associated with that type of trading. Of course, if the market moves against the market maker, they're still going to lose money. But the market maker's goal is to facilitate the trading of the markets by providing liquidity, by adding liquidity to the market. In turn, sometimes they receive fees and rebates for the trades that they take on. So, depending on how the market makers operate, they can potentially operate profitably even by taking break-even trades because they're generating revenue from fees and rebates that they get from the exchanges. But the business of a market maker, like I said, they're facilitating the trading of markets. So the way they trade is like a sell-side institution, but technically they are buy-side because they're directly involved with the market. They're placing orders on the marketplace and they're undertaking risk in the marketplace. So they're technically traders. One of the main takeaways of this video I want you guys to understand is that as a trader looking to learn more about how to trade and different ways to, develop your trading, it's important to study the business models of all of these different institutions here, and that can help you to improve your trading. At least I believe it can, because you can gain a greater understanding of how the trading industry operates, who's making money, how they're making money, how can I apply that to my own trading and to my own business model to make more money, all right? Let's go on and recap over what we covered in this video. So the main points again, as independent traders, it's important to study the business models and entities of both the buy side and the sell side to increase our knowledge and skills. Second thing is, the first thing I mentioned was there's a large gap in knowledge and experience and resources between the professional and non-professional side on the buy side specifically. Now, in regards to that point, the sell side is different because on the sell side, there's so many different categories of institutions that operate there, and each one can serve different roles. So for example, the role of a software company is greatly different than the role of a broker or a clearing firm or an exchange or a big money sell side company that's facilitating the issuing of shares to other buy side participants. The next important takeaway from this video was that traders on the buy side looking to increase their knowledge about the markets and about trading, you should always be skeptical or have some degree of skepticism towards advice that is given to you from the sell side of the industry. And one thing, of course, I forgot to mention, financial news providers, they fall into the sell side as well. Now, that being said, I still think that buy side can learn from information that is given to them by the sell side. All I'm saying is don't take it blindly. And then the last key takeaway from this video is that oftentimes we can see sell side entities disguising themselves as buy side in order to gain more influence and gain more business on the buy side. And I also explained to you guys a little bit about how sometimes buy side entities can also fall into the category of this gray area where they become content creators or intermediaries. And then sell side institutions use that as an advantage, as a way to gain an advantage to gain more business on the buy side. All right, that's going to cover it for today, guys. Thank you for watching. I really appreciate it. Check out this video to learn about my top 3 trading pitfalls that I learned from trading the markets for about 5 years at this point. And click here to watch a whole playlist of videos of different trading experiences that I've had. Thank you for watching. Take care.